talkie. Oi, oi, oi.
And we on the YouTube today.
I'm back, guys. I'm back. I brought him.
Thank you.
You're welcome. Good morning, USA. USA Today. That thing's turned. Why is it turned?
Dude, why is it turned?
They don't know that we like to be center.
We like to be center stage.
Boom. All right, guys. Welcome back. Chris and Lee. Real estate and mortgages. Aliens and JFK. Whatever you want to talk about. Just let us know. But you know what? I do.
The rate's crazy.
There is something that I want to talk about
There's
right
some
now.
crazy stuff.
I got a lot on my mind. I'm about to start flowing.
All right, just flow, man.
You don't
flow
even
like
know,
Eminem.
Dude, you don't even know what's going
Flow
on.
like
in here right
Eminem.
now. I can't flow like
What
Eminem.
are you waiting for?
I'm
KK says, "Happy Valentine's Day. Great to see you, KK. Happy Valentine's Day." Great
And she
to
brought
see
roses.
you.
She brought roses.
You rock.
You
KK.
are a rose. KY. You are a rose. KK. So anyway, here's my rant. Okay.
Oh shit, they did.
Yeah, it's not good, man.
They spiked.
I priced it this morning. It was not
spiked.
good.
Oh yeah.
Happy Valentine's, Navy Mom.
Navy Mom, happy Valentine's Day.
Who else is here? A lot of people here.
KK, we got a lot of people
Bernice
joining
in the house.
We just started up. We're going. So some crazy stuff happened yesterday.
Janice.
Mm-hmm. Okay. So, what do you want to talk about?
My Valentine's cup.
All right. It's your Valentine's cup. It says Friday the 13th. Today's not the 13th.
Well, it's the day after.
And it's not Friday.
It was yesterday.
Friday
My
was
Valentine's
yesterday?
cup. No, the 13th was yesterday. Do math. Basic math.
The 13th.
14 minus 1 is...
I'm not ready for that.
See? Told you. Basic math.
Not ready for
Bust
this.
out a calculator. Sure, why not?
I'm not ready for this.
Sure, why not?
I'm not ready for this. Okay, so here's what happened. It's a crazy
Give us
situation.
a sec. Sure, why not? We'll get to you.
We'll get to you. So, CPI, Consumer Price Index, that's one of the indicators. We were expecting 2.9%. 2.9% says things are getting cheaper. That's what we were expecting. The stock market was expecting it. The bond market was expecting it. Everybody was expecting it. Came in at 3.2, way higher, way higher. Immediately, the stock market tanked. Immediately, closed like 560 points down yesterday. Immediately, all the lenders went into panic mode because if CPI doesn't go in line with what we expect, the Federal Reserve will not decrease rates. So remember that the mortgage rates are based off of the 10-year bond, and there's usually a point to a point and a half spread unless there's uncertainty. And yesterday when CPI came in way higher than expected, the uncertainty went through the roof. And what happened to rates? Bam, they jumped. Immediately they jumped. So yesterday we were saying 5.375 for a 15-year fixed. Right now it's 5.75. So half 50 basis points. That's crazy. Now the 50 basis points are only due to the uncertainty. The bond hasn't changed. But the one thing is that when the banks know they're certain that rates are going to go down, they can plan their profit in. When they're not certain, they have to price it in. So they know by spiking this up, it will take some of the buyers off the market, but for the ones that buy, they make the money. So that's really what's happening here. So, and then I saw something, and I haven't confirmed it yet. I usually like to confirm it a few times before I start telling people. But the Fed says that an interest rate increase is still on the table. Technically, they never took it off. They just said, we believe we're at the peak of the cycle, which means they're on the pause. And it could be just panic selling or clickbait or whatever. People try and say, hey, we're about to increase rates. And if they do, going to send uncertainty and we'll go back high pretty fast. Pretty fast. This just one CPI report, just one, says that we went from 5.375 to 5.75, 50 basis points in a day. One day. Crazy. Anyway.
So that really upsets me, and it upsets me because is it real data? Yeah, I'm sure it is. The way the news puts it out, the way the people are getting the information causes these volatile moments in real estate. You know what I mean? It causes the rates to jump on us or tank on us, depending on where we're at, just based on the news. So, in your opinion, supposed to be at 2.9, correct? Or they
Yeah,
target was 2.9,
yeah, CPI was 2.9.
and then it came in at 3.2. How big of a deal is that on the big picture? Like what?
On the big picture, it's like hitting a pothole on the way to your destination. It's a hiccup,
still
but
gonna make it.
you should be expecting those potholes anyway. We've been telling people, because of all the information and data that we say, that we don't really expect interest rates to start moving down till third quarter. And then there's a lot of people saying, no, it's going to happen January. No, it didn't happen January. There's a lot of people saying, hey, it's going to happen in March. Not going to happen in March. I think it actually starts in June or July and really starts to take effect in August, September, October. I think that's when it happens, and based off the data that I watch. Now, in the meantime, there's going to be some times when it goes, oh, things are great, oh, things are horrible. But if you actually back up enough and you understand how the market works, you understand that the mortgage rates are based off of the 10-year yield. And there's traditionally 100 to 150 basis points spread between the 10-year yield and the mortgage rates, unless there's uncertainty. During the time of the increase, there was uncertainty, and there was as much as 250 basis point spread, which means we were at 8% interest rates. Now, as we started going down and the Fed said, I believe we've reached the peak of the economic cycle, now there's certainty. And that extra 100 basis points just kind of went away. The spread went away because there was a little bit of certainty in the market. But now that CPI came in here, uncertainty's back in the market, and you got a portion of that spread back. So how that manifests is yesterday was 5.375 on a 15-year fix. Today is 5.75 on the New American Funding website. So crazy stuff going on. Crazy stuff. I know it's a lot of technical stuff.
Yeah, we got some. Sure, let's answer some questions.
Okay, cool.
Sure, why not? $82,000 salary, 756 credit, 0 debt. What could I qualify for? First-time home buyer.
First-time home buyer, you're probably starting at 410, 420, somewhere in that range, 410, 420.
Let's get it, sure, why
Yeah,
not?
we can do something like that.
And
yeah.
if Sure Why Not wants to get a home loan, what do they have to do?
You just call us. You need a badass loan? Call a badass loan officer. Chris and Lee are your badass loan officers at New American Funding. You can call us on these phone numbers or text us. And if you want to have a little bit of fun, text us the platform that you saw it on, and we'll call you back. That's it.
Okay, bye.
Goodbye.
So you can screenshot phone number there. You have that phone number, or you can go to the link in the platform that you're on and apply now. Tinfoil brain.
Tinfoil.
Not hat.
Tinfoil
He's like,
brain.
my brain is tinfoil.
Tinfoil brain.
And yes, Sure Why Not Arizona all day long.
Yeah, we do all 50 states. All 50 states. There's not a lot of lenders who can say they do all 50 states. New American Funding, as about 10 days ago, we got licensed to do business in New York. It's probably the toughest one. And then Hawaii prior to that. So all 50 states, Arizona. We love Arizona. We actually work with top producing realtors in Arizona that we really, 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 really like. KDZ, if you're out there, shout out. But we really, really, really like doing loans in Arizona.
Tinfoil brain, credit 650, no saved money, first home, plain and simple. What should my plan be to buy a home in SoCal?
Okay. Plain and simple, if you got no money, you might qualify for probably 2 or 3 down payment assistance programs right now. But it is going to be determined by your income. So we are going to have to calculate your income. We do have a proprietary product that starts at 620, 0 down. 620. Proprietary, meaning that only New American Funding has it.
Right. Changing platforms. Got to get more questions over here.
Okay, cool.
Okay, so Jason Roberts or Jason Burtz, do you guys have advice for self-employed trying to get pre-approved?
Oh, you take that.
Heck, yes, we do. And
Heck
now is the time.
Now.
Because most of you probably haven't filed your taxes yet. And if you do, your tax person's going to do a fantastic job of washing everything away so you don't pay any taxes. But they're also going to wash away your income so you can't buy a house. So what you're going to need to do is get in contact with us so we can see your history and factor that in with what you're going to be doing with your taxes to make sure that you can get a home. So same rules. Screenshot this or screenshot that or go to the link up top and apply now, and we will walk you down the path so you can buy a house this year.
Interest rates spiked, man. They spiked yesterday, but don't let that freak you out. You got to understand that this is a long game. If you're trying to buy a house, it's a long game. And if you think that one specific time is great, it's not. When interest rates are high, It's a buyer's market. If you're a buyer, you got the ability to buy more house or to buy a house because the sellers don't have all the offers. Well, if interest rates are low, it's a seller's market, which means you have to compete. And in order to win, you got to go above asking. Both of those markets are going to exist in 2024. Yesterday, with CPI coming in at 3.2 when we expected 2.9, immediately rocked the markets. Immediately. Stock market dropped 560 points like that. Boom. Stock market dropped. And then instantly, all across America, all lenders start getting lock alerts, which means we anticipate rates going up very soon. And they did. They went from 5.375 yesterday to 5.75 today. 50 basis points. In the mortgage business, that's a lot. That's a lot. But that's only because of uncertainty. As soon as the certainty comes back into the market, it's going to drop right back down.
Cool. AMR 98, AMR 98, 412. What do you guys think of earnest money deposits?
I think you need to be strategic. So, there's earnest money is what you're at risk. And I've had people go into a new build and put $10,000 earnest money to prove they were serious. And then something went south on the loan and they lost $10,000. I've also had people go into a new build and put $1,000 down. And then the loan went south. Not because of us, because of the builder. But they lost $1,000. So EMD is earnest money deposit. That's what's on the line for the borrower if things go south. Nobody wants things to go south. Never. They don't. They wouldn't enter a contract if they did. But I will say 30% of escrows fall out of escrow. 30% for some reason. Sometimes they don't like the house, foundation problems, loan problems, seller problems, buyer problems. All kinds of stuff happen. And sometimes you'll end up back in escrow within 60 days or even 30 days. But things fall apart. And the more EMD that you put, the more of your money that's tied up. So you should consult with your realtor. Your realtor should be very smart. Get a good smart realtor. And the realtor should tell you, hey, listen, we can get away with $1,000. Or if it's a very competitive market, sometimes they're like, hey, you know what? We might entertain this. We want 10 grand. What they're telling you is, if you mess up, I'm keeping 10 grand. So, what do we think about them? They're necessary, but
and they're
you should know what they
negotiable
are.
too.
Yeah, they're negotiable.
You can negotiate them. So if your agent, tell your agent if they don't know that, but they should know it.
Cool.
Camacho 94.
What's
three
up, Camacho?
properties. 3 properties. 809 score. Work minimum wage.
Dude,
Looking to buy my dream house. How possible?
Okay, so if you have 3 properties, I'm going to assume those are income producing. So let's hope those are income producing. And let's hope you filed your Schedule E in a manner that I can use the income from the properties. So if you're making minimum wage, that's going to be factored in, and then that's going to give you your buying power. But where I see your biggest upside is the 3 properties. Your 809 score is amazing. That's awesome. So how is it possible? We calculate those 3 properties. We use income for that. We use your minimum wage. We leverage your 809 FICO score, and we get you into a house. That's how it's possible.
This was pretty cool, and we have the solution already.
Okay.
So user 6213. I can't sell my current home, and I need to get in my new build, but I need the proceeds for the down payment. How do you solve that problem?
What do you think?
NAF cash.
NAF cash.
NAF cash.
I
Right
see
now.
how you went there. Yeah.
So here's what that is.
I see how you went there. I
User
see that.
6213. So you need the money to buy the new house, but your house isn't selling, okay? What we do is we get you fully qualified, which means we need to do your loan, okay? We need to do your loan. We get you fully qualified, put you through underwriting, allow you to buy that new build in cash, okay? In the meanwhile, while you buy that house in cash, you're gonna be selling your other house. When this house, so you can move in if you want, move into that new build. Then once your house sells, we're gonna do the regular loan on your new build, and you get the best of everything, okay? So
Best of everything.
we have the solution for you, but you have to call us. You have to screenshot this, text us, let us know what you're doing, tell us your name and all your data, and we'll get you in your new home. Sell your old home.
if I buy a car under my business name, will it affect my DTI? Okay, so maybe, but maybe not. If it's truly in your business name and your business bought it and your business used its business credit, then no, won't affect you at all. But if you signed for it and then moved it over to the business name and you're the person liable, which is more than likely what happened, most of the time that's what happens, then yes, because you said you're liable. But I moved it over to the business. No, you're still liable for that. And if you own more than 25% of the business, and this is a reporting business, I'm going to have to see the 1120s and the K1s anyway. So we have to see what happened in that business, because sometimes you can make a lot of money W-2 and then you lose money on the business and you're like, hey, let's not count that. No, we have to count it. We have to count it. And when you file your 1040s, we take the loss through the K1, apply it on the 1040, and then we have your AGI, Boom. Adjusted gross income. So with that, we then figure out your situation. What do we got?
So I shared this last week, but I want to share it again this week and just kind of talk to you guys about it, because we're getting these little things in real estate, and if you can see, it says that in 1980, $63,000 was the value, 2000, 165, yep. 2020, 329, 2023, 431. You get what I'm saying here? You see where the trend is going. It's always going up. So all day long, everyone's saying, when's the best time to buy a house? When's the best time to buy a house? So if this thing, the values are always going up, you tell me when's the best time to buy a house. Now think of this. So home prices right now are expensive, crazy expensive. What's the home prices going to be in 2030?
They're going to be more.
2035.
I believe they're going to be more. I don't have a crystal ball.
Me either. But yeah, looking at history, they've always gone up. So what this means is you that are sitting on the fence, you can probably get in right now. You can probably get in. Yep. But when the rates drop and the values skyrocket, because that's what's going to happen, will you be able to qualify then? And then the next question behind that is, if you can buy the house today for, let's say, $500,000, why would you want to buy it tomorrow for $7,000?
Yeah, that's crazy. Erica back. You know your stuff. Great job. I thank you very much, Erica. We appreciate you. Always now is the best time to buy. Yesterday.
You get it, Erica.
Yesterday. You're right. So here's what happens. We have what's something called pent-up demand. And so there's an actual number, but let's just say 30,000 people a month. 30,000 people a month hit that magic age of 33 years old, and they have a household unit, and they now want to buy. But rates are in the 8%. So they can't. They just legitimately can't. So there's 30,000 that happened in January, and they couldn't buy. So they just got pushed aside. Well, that same 30,000 happened December and November and October and September and whatever. So we have about 18 months of pent-up demand right now. So as soon as interest rates start going down, all of these people have the same idea. They're saying, hey guys, now we can qualify. Now, let's flip that to the other side. You have a $500,000 house, right? $500,000 house, and you want to move from California to Florida. And you need to sell that $500,000 house. However, you put it on the market, and nobody's putting offers in. Nobody. So there's actually something on real estate sites called DOM, Days on the Market. And they get to say, hey, this house has been on the market for 45 days. What does that say? It says the market's not really moving or you're overpriced, one of the two. So you have that $500,000 house, and all of a sudden you get one offer. And that offer comes in and says, hey, I like your $500,000 house, and I'll buy your $500,000 house, but I want a discount. They don't say I want a discount. They say, I want you to cover closing costs, which is a $10,000 discount. Or they'll say, I want you to buy down the rate, or whatever. There's a lot of things that they can do. You need a good realtor to do this. So that $500,000 house, they have to go, all right, I haven't offered in 45 days. You know what? I'll give you your discount of $10,000. Boom, sold the house. So now that's a buyer's market because there's not a lot of buyers that qualify. However, flip that over. Interest rates go down. $500,000 market hits the market. And that weekend, open house, 10 offers by Monday. 10 offers. Now you're the seller going, okay, I'm selling my $500,000 house and I have 10 offers. You have 3 always, they'll come in, hey, I'm going to lowball them because they need to sell. So 3 will come in low. 3 will come in at market. And then 3 will come in above market. Now, if you were the seller, what would you do? Would you look at the 3 that lowballed you? You would go, no, thank you for applying. Have a great day. And sometimes people get mad. They're like, aren't you going to counter me? No, I got too many other offers. I don't want to counter you. You gave me your highest and best. I believe you. Bye. Then the ones that came in at price. Okay, that's good. I like that. But let's talk about the ones that came in overpriced first. Okay, so this guy's coming in 10,000 over. Holy smokes. I like that. If you're the seller, you like that. Now, all of a sudden, it gets sold for 10,000 over. So now the market is no longer 500,000. That market's now 510,000 because by definition, the market is whatever the market will bear, and the market bears 510,000. So now that it bears 510,000, 9 people who tried to get this house are going, I keep bidding, but I'm not winning. Now we're in a seller's market because they waited till the interest rates went down, and the market will continue to climb. It's a cycle. It's not magic. It's a cycle. You just need to understand the cycle. Anyway, I know I'm talking a lot, so go ahead.
Yeah, that's what we're here to do, man. We're here to share the data. So,
Data.
check this out, guys. So I think a lot about what you guys ask. I think about, when's the good time to buy, interest rates, prices, all the stuff that's combined. And one thought that hit my mind that I think is gold, and I think we forgot about this.
Tell me.
Monopoly. Okay? So when you're playing the game of Monopoly, when's the best time to buy?
Always right now, because you're going to play the game long enough and you'll have hotels on Park Avenue, and then you're rich.
Here's what happens. You're playing Monopoly, you get like $100, you start with a little bit, you get a little bit more money, then you're like, oh, I have just enough money to buy one house. You're not thinking, hey, let me save enough for reserves, let me save enough for just in case. No, you have just enough money, so you buy one house. And then you have just enough money, so you buy 2 houses. And then you have just enough money, so you buy 4 houses. And now I have just enough money, so I buy a hotel. And the next thing, that person that didn't wait for the deal, that didn't wait to save more money, that didn't wait to fix their credit, has hotels all around the board, or houses all around the board. So that person didn't go out and party, didn't spend their money on a fancy car, didn't, try to give their kids the best Christmas, but now owns the whole board and rules everyone and can buy whatever they want. That's real life. That's real life happening right now. So those people that aren't waiting for the deal, they're just like, hey, I want to buy a house. They're saving enough money, credit's good enough, they execute. They get a house, and then they get another one, and then they get another one. And these same people you see every day. It's called the millionaire next door. They don't drive the fanciest car. They don't have the fancy handbags or fancy watches. They just are managing their portfolio, and they are all rich. And you're correct. Your Monopoly analogy is great. This is real life, guys. Play Monopoly. If you haven't played it in a long time, play it now. Maybe it'll help you kick things into gear.
And I can tell you that I've helped a lot of people that buy their first house, and then 2-3 years later, they're like, well, I was thinking about renting that one and buying another one. Okay, cool, let's do it. Not high, like massive earners, decent earners, $80,000, $70,000, $80,000 a year. But before you know it, they got 4 or 5 houses. And I'm starting to open up guidelines because I'm going like, wait a minute, you got too big of a real estate portfolio for me to put you in a regular loan. Because for those who don't know, once you get above 4, the guidelines change. Once you get above 6, the guidelines change again. Once you get above 8, the guidelines change again. As you build this real estate portfolio, and this is just an average working person. And I've seen that happen many, many times. And leverage really does work that way in life. When you have 5 properties that are just paying you rent, sure, there are problems. There are problems, but at the end of the year, there's profit. And then all of a sudden, you're like, hey, I make $80,000 from my job, and I make $120,000 from my rentals. And I'm like, yeah, that's a pretty good scenario to be in. Good for you. Good for you. So that happens often. We get to watch people build this. So whenever I see some young person going, hey, listen, I'm just 22 years old, and I'm an E4 in the military, and I'm thinking about buying my first house, I usually say, hey, congratulations for even thinking that. Because if you do this correctly and you started at 24 years old or 22, whatever I said, then by the time you're 40, you'll have 2, 3, 4, 5 houses, and you're going to be in a whole different category. So, yes, if you can buy, yes.
So what you said is important, man. I think a lot of people need to hear this too. I'm on a freaking soapbox right now.
All right, do it. Soapbox.
So, like, what you said was basically take a young person, give them the data, see what they do with it. Okay? Do you have a child that owns a home?
Yes.
Okay. Why?
Because I taught him.
He got the data.
Yeah.
Parents own a home.
Yep.
I own a home. My kids will own a home.
Yep.
And it keeps going down. And some of them take it to another level and become mega rich, owning real estate. But that's not what I'm talking about. What I'm talking about is parents or those people that are older that have either done it or trying to do it should be sharing the data, saying you should have good credit. You should save a little bit of money. You should buy a house as soon as you can. And the reason why is because those people's lives seem to be a lot better down the road. Now, owning a home doesn't make you rich, but it could. Buying a bunch of houses doesn't necessarily, take you out of your job and make you self-employed, but it could. There's a lot of possibility, and the first thing we need to do is have the conversations with the people and say, hey, you could own a home, and here's why you should, and here's how you do it. But if you don't hear that, you never own a home. And if you look at your lineage, your parents probably never owned a home, your grandparents never owned a home, and it has to start somewhere, guys, and it probably can start with you. You just need to make the leap and give us a call.
Give us a call. Does a USDA one-time closed construction loan have a time frame to build? So I don't know the guidelines exactly, but I'm going to tell you that everything has a time frame. Everything. If you don't do it with a certain period of time, you're going to stale date anything. Anything. Because codes change, city codes change, building codes change. Building codes change every year. In California, about 2 years ago, they mandated every new build has to have solar. And I said, okay, all right, whatever. New builds have to have solar. Now I'm putting an ADU on one of my rentals, and I'm like, okay, cool. Here's the plans for the ADU. They're like, where's the plans for the solar? And I'm like, it's not a house. It's a ADU, accessory dwelling unit. And they said, no, it's new build. You're newly building an ADU. You must have solar. You must meet all the. And I'm like, wait a minute, what? This wasn't that way last year. And they're like, it is this year. Fix it. And that's it. That's how it works. Rules? Yeah. So so the USDA one-time construction loans, those are cute. The VA has a version of that too. But the truth is, they're so laborious and so much red tape that I've never pulled one off. I've done 203K loans many times, but I've never pulled off a USDA one-time construction loan. And they sound great, but there's a lot of boxes to check to make that happen. So next, what do we got?
The other thing is, I think you look at USDA because it's zero down, right?
Yeah.
So you're like, I don't want to put any money into it, or maybe I don't have any money into it. But if you're moving forward with a project, expect things to pop up that you did not expect to pay for. Any project. I don't care if you're changing the kitchen sink, changing the engine in your car, or building a house. Expect to pay extra all the time because things go wrong. So if you're building, expect to be someone that's going to be able to carry costs. It's kind of a big deal. Also, for those of you that are interested in buying a house, another thing I want to hit on is I know Lead Dog's on the California Pay for All program, which rightfully so, you could dog on it. But that's not the only down payment assistance program that we use. We use a lot of them, and they haven't run out of money ever since I've been working them.
Name it.
Calhafa.
Calhafa's never run out of money.
And also,
Platinum
there's
has.
different ones.
Sapphire
So
has.
it's not just one program that. When did Platinum run out of money? We're waiting.
I was just testing you.
You triggered my brain. So that's not the only program, guys. There's a lot of programs where you don't have to pay the money back, where you don't have to borrow from Uncle Mafia. There's a whole lot of other things going out there. Just inquire. See what you guys can do. I bet we can put more of you into houses and you don't even know it.
So off the top of your head, name the down payment assistance programs that come to mind. Just off the top of your head.
Calhafa, Platinum, Shadap, Chinoa. Help me.
Open Door.
There you go.
Sapphire.
There you go. What's our proprietary called? Pathway.
Then what's the LP one? Not Open Door, but Home Possible.
Home Ready, Home
Possible. Home Ready, Home Possible. So that's like 8 that we named off the top of our head. And that's just, and then there's some locally. So like there's some in Texas that are local. There's some in Virginia we've done it local. There's a lot of different programs that are out there. Ryan, where's my $1 million?
No, the houses that are falling off the cliff in Dana Point. Have you seen those? There's
no.
like multi-million-dollar mansions that are about to just go over the cliff
I
because
bet
of
you they're
mudslides.
cheaper now.
I don't know that.
Yeah, I know.
That's
right?
expensive land, man.
I know.
I don't know that. So what is up with them, Ryan? Have they fallen? Are they gonna fall? Did they put a rope on it so it doesn't? Did they get
Put
their
a rope on it?
2,500 and pull it back? Like
So in Florida, I lived in Florida for a while. They actually build houses on stilts
that seems silly.
on the ocean.
That seems so silly.
And then they factor in the insurance because they know it's going to get demolished. So you know how we factor in tax base?
Yeah.
They factor in high insurance because they know, well, when this gets demolished, the insurance will cover it. And in the meantime, I just put big amounts in insurance. It's crazy. I remember going,
Silly.
how about you don't build houses on the ocean?
So okay, so natural disasters, right? The ocean, like being beachfront, is dangerous. It really is. Although it's a once in a lifetime type of thing, like tsunamis and
I
stuff
don't
like
think
that.
once in a lifetime. I think like once every 20 years. It just happened in Florida.
Well-
a big, huge tsunami hit Florida, and it just kind of everybody that was just hanging out every single day. There's like, here comes some water. Holy shit! And then the water just went high all the way into the city, and then it just went away. Just a big wave.
Well, who remember Dan? That old man Dan that talks real crass. He's a businessman.
Yeah.
The one
Dan-
that said
Dan Peña.
Dan Peña.
Yeah.
The one that said that global warming's not even real. Look at all the real estate on the freaking ocean that all the rich people own that aren't selling.
Yeah.
Because that would be the worst property to own. But it is sometimes when you have these disasters. Even in Costa Mesa, right down the street from us in the beach.
Oh yeah, I think that happened there
It
too.
went
right?
over the wall.
Went over the wall.
Yeah, all the local stores got
Yeah.
flooded, I
It's
think.
like, they're like, hey, I'm like, yeah, this is probably a downside of.
So you
being
know
on
what we
the
should
beach.
do? We should put it on the water with
Yeah.
sticks.
Yes,
that's
what
the better
They do
idea.
it. They do it, man. No joke, they do it.
you
I'm
gotta
sitting there
be
going,
rich to
I
do
cannot
it.
believe that stuff. You got to be really rich.
Not broke.
And then you plan in. You're like, hey, my insurance is a write-off. I'll have my whatever grease money in order to pay for the insurance. It's crazy stuff that happens. Just crazy.
Some houses can't even get insurance inland.
Right.
Like, how are they financing these, or not financing, but how are they insuring the homes in Florida?
So what do you guys? What kind of questions do you have? Interest rates have just gone up. Is anybody panicked about it? We're not. We're not. Because it's a cycle. You know what's going to happen? Interest rates are going to go up, which they already have. They went up 50 basis points in a day. 50 basis points in a day. That's crazy. Nothing changed in the yield. Nothing changed in the 10-year yield.
So give us
But
some perspective.
The uncertainty crept back into the market, and uncertainty means things cost more. Always, things cost more. Good.
So, how much did we fall in the stock market yesterday?
560 points.
If that would have
The Dow.
happened in 1995, what would that look like?
Oh, God.
That's a panic, right?
In 1995, the Dow was probably 15,000. So 500 would have been that. It did happen like that a couple of days, and they called them.
Well, it's Black Friday.
Yeah, that's what it was.
What is that? What was that exactly?
I think it was 800 points.
88 or 89?
Yeah, something like that.
So it dropped 800 points?
Yeah.
And then everything shut down.
Everything shut down.
And yesterday we dropped 500 points, and we're kind of okay. Everything's fine.
Yeah, and well, it's rebounding today. It's rebounding a little bit, but the
That's
uncertainty, the first spike of uncertainty gets crazy, but then it starts to stabilize. And as soon as the Fed comes out and reassures the economy and says, we believe we're still on the pause, we don't see economic factors that would cause us to raise interest rates, but we'll remain open to the idea. That's certainty. Once we get certainty, that 50 basis points will disappear again, and then everybody goes, hey, we think it's going to happen. I don't really think we're going to get an interest rate reduction until probably June, July. So there's odds makers saying that May. I don't think it's May. I've been saying for a long time, based on all of the factors, third quarter is going to be a great quarter for loan officers, for realtors, for sellers. And it sounds like for buyers, but not necessarily.
Why not for buyers?
Because interest rates are going to go down, but they're going to go back into a competitive market. And I lived not very long ago where somebody was saying, hey, listen, Lee, I qualify for a $400,000 house, but nobody sells me a house for $400,000. Nobody. You know why? Because even if the house is listed for $400,000, immediately everybody comes in at $410,000. And I don't have that extra $10,000, which sounds great for, it sounds great, but it's horrible if you're that buyer. Have you seen those buyers?
Mm-mm.
Where they're going, hey, I keep offering and I don't get anything. I keep offering and I don't get anything. You never seen that buyer?
Mm-mm.
Okay. All right. We have the same buyers, and I remember seeing them.
I don't know.
Okay.
Is this affiliate marketing?
If you're talking about the Roadmap to Riches is digital marketing, and it's using something called an MRR, which is Master Resale Rights, which is not affiliate marketing. It's not affiliate because affiliate marketing means the person that signed you on you're an affiliate of theirs, and then they make money every time you do it. Master Resale Rights is way different. It means that you own the product entirely, and you have the ability to resell it as long as you don't alter it. So they're different. They're different. So no
services or products of your own or anyone else's. So yeah, we do what he talked about. But this is mortgages. We're talking about home loans and mortgages.
Spoke on the live a couple of days ago. Got approved 200K house with 61,000 down and 9% with 21st.
With us, Casey. You got pre-qualified with us?
I don't know if you got qualified with us, but
because we have 21st on our roster.
Oh, we do? Okay, cool. Yeah.
So it might be with us.
9% is high. Well, it depends. Depends on the scenario.
I can look at your file if you did it with us, and I can give you another opinion on it. But let me know. Was that with us?
Yeah, 200K, 61,500 down with 9%. Okay, 9%. Yeah.
So dude,
that looks like an alt QM, right? It's an alt QM.
Yeah, it's absolutely alt QM.
Yeah, okay.
But on the person's thing above that was asking about, he did it with 21st.
Oh, okay. 21st. Oh, yeah. Have us take a look at it. Yeah, we can take a look at it. Sometimes for the alt QMs, we can beat them. Sometimes we can't. And we'll be honest with you. If we can beat it, we'll show you how we beat it. If we can't, sometimes you're just in a good situation. We'll find out.
So here's what's funny, Casey, is that we can do loans through 21st. We can do loans through most people.
Yeah.
So what that means is you can get a bigger scope to look through when you come through us and see we can possibly find you a better solution with less money out of pocket. Damn, fixed rate today is 7.88, I see.
That's crazy, Ryan. It's crazy. It jumped 50 basis points for most. Some people went up as high as 80 basis points. We went from, we were quoting on the New American Funding website. If you're an LO, take a look at the New American Funding website. You can go to the top of our profile, and it'll say links. Then go to cool stuff. You'll see today's rates. New American Funding puts the rates out every single day. Yesterday, we were putting out a 15-year conventional fixed at 5.375. Today, 5.875, 50 basis point hike because CPI came in at 3.2 instead of 2.9. So just entirely different, but it's a 50 basis point raise. Don't panic if you're an LO. Hey, Diablo Mortgage, what's up?
Great to see you in the house.
What's up, Diablo? Hey, don't panic because we still anticipate that the interest rates are going down. They are going to go down. But what you're feeling is the uncertainty of the market. Markets respond to uncertainty and they respond to certainty. So the reason that we had that giant basis point drop about 2 months ago is the Fed said, we believe we've reached the peak of the economic cycle.
Fed said.
Yeah, the Fed said. Yeah, Fed said.
Like a rapper.
Fed said. Dude, I can rap.
What's your rapper name?
Finance. So the Fed said that we believe we reached the peak of the economic cycle, and then there was a yield spread of about 250 basis points between the 10-year yield and mortgage rates. So that's a big spread. It's way more than traditional, but that's because they were all uncertain what was going on. Uncertainty makes things more expensive. So as soon as the Fed said, we believe we reached the peak of the economic cycle, instead of 250 basis points, it dropped 100 basis points almost overnight. And it dropped to 100, the traditional spread is 100 to 150 basis point spread. So the way that manifests to you guys is the rates went down a lot. And you went from 8% down into the 7s and 6s, and under a perfect scenario, New American Funding's quoting 5.375. Actually, we were quoting 5.25 for a while. But then, yesterday, CPI came in way high, and that's uncertainty again, because the Fed has not taken off the table the ability to raise interest rates. And if they choose to raise it, boom, everything's going to spike up. I don't think they'll do it because they'll destroy the economy. But it's a possibility. I do believe they will prolong the pause, which is what I've thought the whole time. If you've been listening to us, I've been saying this for about a year. We're not actually going to see a correction till third quarter of 24. And then when we do, it's going to go crazy. If you're an LO, I know we got 2 LOs at least on our feed right now. If you're an LO, you're going to make a boatload of money, like a boatload of money. If you're a realtor and you're active in doing what you need to do, you're going to make a lot of money. And if you're a buyer, you're going to be able to get into a house. If you're a seller, you're going to sell for more. All of this is based off of the Fed and what they do. The Fed controls our markets and largely the world because the dollar is still the backbone for the globe. Anyway,
Justine, hello, I have a question. My mortgage company locked me in at 6.5%. We are getting ready to close, and disclosures say 7.375%. Why would they do that if it's locked at 6.5?
Oh, Justine.
Oh, no!
Justine, I hate to say this, but you may not be in a good spot. They could have told you, hey, yeah, it's locked. And they didn't lock it. And then, oh my God, rates went up because rates are rates. They don't get to choose we don't get to choose the rates. We have to go based off what the market gives us. And whatever the market gives us, that's what we do. And if we tell you, we won't tell you you're locked until you're locked. If you're locked, we'll actually send you a lock confirmation. We have to, the minute you are locked, your LO by law has to send out what's called a COC. COC is change of circumstance. The change of circumstance is I was from floating a rate to a locked rate. So once you get that COC and it shows the lock, you're in. That's it. They can't change it on you. Those are the rules. But if they didn't lock it,
they made me pay $500 to lock it.
Oh,
What's that?
Yeah, that's
weird.
That's a little rough. Yeah, Justine, you may want to send us your locked LE. Just email us your locked LE. And just the minute you tell a loan officer, can I get a copy of my locked LE? They know you have somebody who knows what the hell they're doing checking it. So, because nobody knows to ask for a locked LE.
Diablo could be correct. Diablo
Yeah.
is saying maybe it's with finance card costs, which is your APR.
Yeah, your APR may be different than your mortgage rate. So
either way, I want to see this thing.
That's a big spread.
I want to see this thing.
Yeah.
I want to see why you paid $500. I
Yeah.
want to see your loan estimate.
Yeah, so here's what happens. Your APR is all the other finances wrapped in so you can have an idea if you're getting charged a whole bunch. So let's just say you had to pay for that 6.5 and you had to pay $9,000. That would be built into your APR because that has to factor into the large cost. And this is largely a way for you to figure out if somebody's trying to pull the wool over you because your rate and your APR should be close. Your APR is almost always a little higher, but it should be close. If you see us, and by close, I mean 3/8 of a point, quarter of a point to 3/8 of a point. If you're presenting 50 to 75 basis point difference, there's a lot going on there. We need to look at that.
Also, Ryan, you're right. She might have got. The rates go down, but I don't want to. Yeah, Ryan's up with speed, man. He's like, they're going to go down, but not in a few months. You know your stuff, Ryan. Anyway, so here's a fear that I have, and I've always had because I've seen it, is that builders' competition is us, okay? And there's a lot more that we could do to help you guys than a builder can, okay? Well, maybe they can give you closing costs every now and again, but they hate us because we come out of the woodwork just throwing the kitchen sink, and it's hard for them to compete. So what I think they do is say, hey, you're going to have a 6.5 rate. It's going to be good. We'll lock it in and everything. And then they walk you down the path until the very end and then lock you in at a real rate so you never went to go meet a Chris and Lee. Yeah. So that's conspiracy theory. I don't know if it's true or not, but I do want to see that loan estimate. Please send it to us. Our email addresses are at the bottom right there. Screenshot this. I'm going to give you a couple seconds to screenshot it. You got a couple more seconds. All right, that's it.
And make sure it says locked LE, because if they send you an unlocked LE, that's bullshit. They get to put in whatever they want because it's not locked. And it'll say in the upper right-hand corner, note, this loan is not locked and subject to change whenever the loan officer chooses to change it. So once it's locked, that's a legal thing.
Yeah. They made me lock. Okay. Bear 120. They got a 4.875, no points. All right.
I want to see you do that. That's pretty rough. That's pretty hard to do. Yeah. That's like almost impossible, I'd say.
Ryan said they didn't lock it. 500 sounds cheap for 90 days. I don't even know what that cost is.
I know. We don't charge. Cost? Yeah. The only time we charge is if you extend beyond your lock range. So we can lock for 30 days. We can lock for 15 days. Heck, we can even lock for 10 days. And we can lock for 90 days. If we're worried about the market, and we can lock right now, and we can lock for 90 days. But once you're locked, you're locked. And the only one who can get around that is the brokers, and the broker, it's a little dirty birdie, but they'll repackage it and send it to another lender, and it gets a little dirty inside of that. But if you're with like a direct lender, once we locked you, we can't undo it. You're locked. That's what it is. We all agreed to it. Locked. Now, there is a scenario where we can unlock you or release the lock and wait 30 days and then relock. So there is a scenario where we can do that, but if you're getting close to close of escrow, we time the lock like really good.
Okay, so just a quick announcement, everybody. If you're interested in getting pre-qualified, you can screenshot us. There's a phone number here you can text. Text us the platform that you're on, or you can go to the link above. It says stand.store. Click on it and apply now. All right, Justine, we're going to keep our eyes out for that. Let us know when it comes in.
I think Ryan's an LO, right? He comes in every once in a while.
Ryan,
great to see you, man. Yeah, he's a bit of a badass. He always wanted $1 million loan, but
Queen Vicky, does making an extra payment a year help?
A lot, Queen Vicky.
What?
A lot. Not a little bit, a lot. But the banks play a game, and you need to know this, Queen Vicky. I like that name, Queen Vicky. Queen Vicky. Here's what they do. If you send a payment in and you say, hey, here's a payment, if they apply it to principal every year, it will reduce your overall cost, and the bank makes less money. So if you don't specifically designate to principal, they will consider it an advanced payment. So you'll be like, no, you're ahead a month. No, I made an extra payment. Oh, no, that's not how we saw it. We saw you made an advanced payment, so you're just ahead a month. So what you do is you say, apply this exclusively to principal. If you write a check, put it in the memo section because that's a legal contract. If you're doing it through the app, make sure you go to the app that says this part will be applied exclusively to principal. Because if you don't say that, the bank has the ability to designate saying, hey, listen, it's an advance payment. Okay, we're going to call it advance payment, which doesn't change anything. Just the last payment, you'll have to make one less. Or they can add it to escrow. They're going, hey, we overfunded your escrow account. Oh, here's some money back. So the bank does, because the bank makes a lot of money. Not a little bit of money, a lot of money. So let me give you an example. If you financed a $500,000 house, at the end of 30 years, if you finance it at 7 to 8%, you will have paid $1.7 million on a $500,000 finance, somewhere in that neighborhood. That means the bank made $1.2 million to get a average middle class working person into a house because they lent you the money. They're making $1.2 million in profit. Guess where they make most of that? First half of the loan. The majority of your loan goes to the bank when you first make your payment. If you're making a $3,000 payment, you know how much your principal is being reduced by? Maybe $300, maybe $400 off that $3,000 a month payment, because it's going to pay for those big glass buildings and all that big stuff that the bankers have. So just keep that in mind, big picture.
So yeah, make your extra payment.
Yep.
Builders can't compete. They're all talk.
They're all talk.
Right, Ryan.
Yeah, sometimes they can compete.
What's up, Gabriel?
Yeah, they're dirty birdies.
Gabriel Beltran
What's
in the
up,
house.
Gabriel?
Devon Dixon lives in Arizona.
Are you bragging? Are you bragging? Arizona's pretty badass.
like
We love Arizona. I love
Ben Oneto. If I lock a rate and they drop, am I stuck with the higher rate?
Ben.
Woo! I got some good news for you. We got a little bit of something called a float down.
A float down?
We have a float down.
What's a float down?
So that means that if we lock you in and the rates go down, we can float you down to that rate. Is it free? No, never free. And other banks do it too, and it's not free, but it can help you.
Yeah.
Queen Vicky, what happens if you do double payments for a year on your mortgage?
If you double payment, first off, if you actually have the discipline to pull that off, you'll probably pay off your mortgage in 12 years.
Yep.
Probably 12 years. But
Yep.
you have to make sure that that extra payment goes exclusively to principal. Because let me tell you my math on this. If you had a $3,000 a month payment, first off, $1,000 probably goes to taxes and insurance. So you're only paying $2,000. And of that $2,000, only a small amount goes to principal, called $500. So you're paying $1,500 to interest. But if you double that payment and you said, hey, listen, instead of paying $500 to interest, I'm going to double that $3,000 payment. And I'm going to say, you take your $500 like you normally do, and then here's an extra $3,000 on top. Well, $3,000 is 7 months in advance of what you would have normally gotten reduced in your principal, which will translate into you'll pay that mortgage off lightning quick. And the bank knows this. Unless you specifically designate to principal, they will try and deem it an advanced payment. I've seen this a lot. So do it correctly and you will change your life.
Boom. How about if I wanted to become a loan officer? Any suggestions?
Yeah. First off, it's a great profession. It really is. But it's a technical profession. You got to be very smart and you got to be good with people. You got to know your stuff and you got to be good with people. The most important thing you will ever choose, the most important, is the mentor. Don't go after basis points, because when you get a loan officer, somebody's going to say, hey, come work for my broker. I'll give you 300 basis points, which is high. It means you make 3% off every loan. It's fun. A $500,000 loan, you make $15,000. That's a lot, but you don't know the business. You don't know shit. Sorry. You don't know shit. I said it again. So you won't know shit, and you won't know till about 3 or 4 years. And the truth is, you will hurt people. Because you have no idea what the rules are. You will hurt people.
Hurt people, hurt people.
And you will hurt them. You'll get people in escrow. You'll be like, hey, this agent really loves me. Okay, cool. Here, they gave me a client. Okay, cool. And then you'll go, oh my God, I forgot to calculate the residual.
Now does realtor love you?
Now, oh my God, this loan's not going to work. And you're going to feel like the whole world crushes in on you because the listing agent trusted you. The buyer's agent trusted you. The buyer trusted you. Escrow trusted you. Everybody trusted you. And you forgot to calculate the residual correctly. And now this whole thing falls apart. And if you're true about it, it was your fault.
Or you forgot to lock a loan.
Now, if you have a mentor, the mentor is going to look at your loan and go, hey, no, this isn't right. You got to calculate residual. And before you get into escrow, they'll catch it and they will save you. And you probably are going to make a lot of money if you wait. You're going to make less commission working for a mentor because they're going to take some kind of bips over you. But it is by far worth it. You can play short game and make a lot of money in a little bit, and then nobody wants to talk to you ever again. I have a lot of people that I know that did that.
Like MLMers.
Or you can play long game, actually deliver good customer service. Understand, I got no problem telling people I make a commission. I have no problem. I don't make the highest. I don't even make 1/4 of what I could make. I have people all the time saying, hey, I'll write a big fat check to you guys to come over to our bank. And I'm like, nah, I'm playing long game. I want to treat my customers well. I want to help my customers. And they come back to me over and over and over again. The reason that Chris and I survived through this downturn is because we play the long game. So if you want to become a loan officer, great profession. It is very difficult. Most people will fail, and not because of the test. Don't think the test is the see-all end-all. The test is hard, but once you pass the test, the business is hard. And it's hard because there's a lot of snakes out there, and you need somebody to help you navigate those waters because it's a dirty business, kind of a dirty business, but it's a good business. You help people.
Yeah. Ben, sorry, I joined at the end of talking about rate locks. No worries, Ben. Anytime, ask any question. Yeah. We'll go over everything again. Donovan Dixon, what if I don't qualify for loans?
Well, you make yourself qualify. That's it. And it's pretty simple. Just 3 things. Credit, income, assets. That's it. Fix those 3 things, you're good to go.
And we'll help you. On your own. We'll help you. Alicia 5.7, why do people go after your past credit debt you've worked for years? Why do they go after your past credit debt you've had for years?
I don't know what that means, Elisa 5.7.
Ask that again.
But I do like the name, Elisa 5.7.
Yeah, 1.0, 2.0, 3.0. She's like, no,
she's
5.7.
Like 5. Yeah.
Maybe she has 5.7 liters under the hood.
Ooh,
you know what I'm saying?
Smokes. Holy smokes.
You're welcome, Queen Vicky.
We're here for you, Queen Vicky.
Who's your loan officer?
LOL. Who's your loan officer? Who's your loan officer? He's a loan daddy.
Test was easy compared to real game. Test was easy compared to the real game. Oh, you talking about this business?
Yeah.
Yeah.
No, the test is easy compared to the real game is rough, man. And I'll tell you what, I met with this one person. I love this woman. She's amazing. She's been an LOA for a long time, loan officer assistant. She's been an LO. And she comes to me and she says, Lee, I think I have a problem. I said, what? And she goes, well, without telling anybody, I went and got my NMLS. And now they don't want me anymore. And she said, why? I think I would be more valuable. And I said, no, you're not. You're actually in a bad spot. And she says, why? And I said, because the minute you get your loan officer's license, is it any gray area that you want to go be a loan officer? She goes, of course not. I want to be a loan officer. Cool. Why would I train you to compete against me?
Dang.
Why would I train you to compete? Because you will be directly competing against me. What's worse is that because you're my LOA, she wasn't my LOA, but what's worse is because you're my LOA, you have all the relationships with my realtors that I do and the relationships with my clients. And when you leave to become a loan officer, they get to choose who they work with. I don't get to force them to work with me. If they liked you better, they work with you. Why would I train that? Why?
And you're prettier than me.
And you're prettier than me, yeah. And you're prettier than me. She's a very pretty girl. So I'm like, yeah, that's why. And I said, you're going to have a very hard time finding somebody to train you now that you have a license. Very hard time. And she's like, that doesn't make any sense. I said, yeah, it does make sense. The right way to do it is to enter under a loan officer and say, hey, listen, I'm going to be working under you for 3 years. And I want stepped up commission-based bonuses. So when I start, it's this. And once I produce so much, it's this. And when I produce so much, it's this. And at the end of 3 years, I'm going to leave you. So now as an LO, I know what I'm getting. I know I'm going to train really hard. But I also know at 3 years, I'm either going to have to offer you a partnership or realize that some of my clients may be at risk and I'll probably have some kind of deal. But there's a proper way to do this. And if you don't do it right, you enter going, holy smokes, I can make $15,000 on a loan? Oh my God. And then you hurt 1 or 2 people, no realtors talk to you anymore, and then you're out of the business. You're at Starbucks.
I don't like Starbucks.
Yeah.
Shy Killa, $55,000 to $60,000 a year with also $200 monthly child support and $20,000 down. What can I get?
$20,000? Shoot, you're probably starting $350,000.
Let's do it.
$350,000 going up from there.
I don't know about in Chicago, Shy Killa, but maybe on the outskirts.
Yeah. $350,000. You might even be able to get to $400,000. I'd have to check that $200 monthly child support if it's court ordered. I might be able to gross it up, which means it's no longer $200,000, it's $250,000 for loan purposes. There's some guidelines that I have to trigger, but we'll work on it.
Shy Killa messing with me. She's from she's from Houston.
Houston, I love Houston.
Houston,
It's hot
Texas,
there.
baby.
It's hot there.
Anthony Thomas. If you make $65,000 a year with a credit score of 798, what amount of home loan can you qualify in Illinois?
It's going to depend on your tax base because Illinois is one of those strange. Its tax base is different everywhere you go. A little bit tax base, and if you go to a new build, it's going to change. But I would say you start about $340,000, $350,000, somewhere in that range, and then we just go up from there.
Ryan's going to be an underwriter. I'm going to make him our underwriter.
Yeah,
like,
maybe.
Approve this, Ryan.
Maybe. I know some underwriters that just want out of the business, man. I had a bad mentor. Sorry, Ryan, that sucks.
We've all had one of those.
It sucks. And you know why it sucks? Because once you learn bad habits, you can't learn good habits. It's really difficult. There's this little group that I recommend you join, but you can't join until you make enough money. It's called The Core. The Core, and I'm not commercial for them. I actually don't, I'm not a member of them anymore, but I was for a long time. And The Core will basically force you to have relationships. They'll say, hey, listen, did you call 50 people? Did you call 50 people this week? If not, why pay me?
Did you make a list of 50 people?
Did you make a list of 50 people? Did you have two leveraged events? It was 2 leveraged events a month, right? 2 leveraged events? So, yeah. 2 leveraged events. What does that mean? That means you went out and you created something of value for a bunch of people. And like a meet and greet, lunch and learn, how to buy a first-time house, how to down payment assistance programs. You taught the world something. And they make you do these leveraged events. They make you call your top 50 realtors every Monday, right? Monday, realtor calls Monday. Tuesday updates, Wednesday listing agent calls. There's a way to do this, and it is a very systemic way to do things. Can anyone join the Core? Probably not. I think you have to have $100,000 for 2 years before they let you in. I think that's the rule. I don't know anymore because I'm not a member, but I'm very glad I did it because it taught me, you know what? No matter what, stay in front of the client. And they'll also tell you, don't spend the time on the dumb stuff. Don't spend the time collecting documents. No, you hire somebody. You pay somebody. Your highest and best use is talking to that client, understanding the guidelines, understanding that this is a sales business, but it's also a customer service business, and you must treat your customers very well. They'll also tell you in the core, don't trace basis points. If you're out after trying to get 300 basis points, and that's a big commission in loan officer world, you can make, like on a $500,000 loan, the loan officer can make $15,000. And you can do that, but you will burn your clients. Your rates aren't the best. You can't beat everybody in rates. You will lose in rates. You'll make a lot of money, but you won't have a very long stint in the mortgage business. They'll actually tell you your better basis points is 90 to about 150, somewhere in that range. They'll teach you all of this stuff. I think they're very good. I'm not sitting here trying to be a commercial for them. There's another program out there called Mortgage Marketing Animals. They'll tell you basically the same stuff. We've joined a few of these groups. We understand the essence of it. It's very good because even at a high level, I know guys who make $1 million a year who pay the core $4,000 a month to basically make sure they stay on track because they make $1 million a year. And the core says you should only work 38 hours a week, but make sure you work those 38. Don't fake them. Those 38 should be on the phone with a customer, doing leveraged events. They should be doing good stuff. So I'm a fan of the core, and we were members of the core for years and years and years. I'm a fan. Not anybody can join. I think you have to show 2 years of $100,000 plus in order to join. And the higher levels, you have to show, I think it's $250,000, something like that, or 300,000.
Yeah,
you have to show, but you have to be. They have to prove that you can afford to be in there before they let you in there.
All right, commercial.
All right, cool. If you need a badass loan, call Badass Loan Officer. You can reach a badass loan officer, Chris and Lee at New American Funding, by texting these numbers or calling them or whatever you want to do. Just get a hold of us. This will disappear in 5, 4, 3, 2, 1. Bye.
All right, ready to go?
Cool. Are we done?
Yep.
Dude, we've been here freaking an hour, man. Hey, you know what? We appreciate you guys. If we didn't get to your question, please join us again or text us or email us. We're trying to give you the honest data. If you're joining the loan business, we want to help you with that. If you're trying to get a house, we want to help you get a house in 2024. I appreciate you guys.